150 shares of Kalyan Jewelers. He bought it at 585 rupees. Currently, he has made profits of around 30,000 there with this investment. He's asking whether he should hold or sell the counter. So, Mr. Chokalingam, in the current geopolitical scenario, people are looking towards gold and, the jewelry space in particular as a safe haven. But Kalyan Jewelers as a counter, what's your outlook for the long term?
The long-term outlook for gold is certainly positive, no doubt. As you rightly mentioned, geopolitical tensions are there. That could be a negative factor for jewelers because all of us know that gold prices have gone up substantially. And in down south, it's called 1 8 gram. And for marriages, they count in multiples of 8 gram, minimum quantity they have to buy. I have personally interacted with a lot of middle class people, who have got the daughters, yet to be married. There's a lot of stress, in south you can see particularly in terms of accumulating gold for wedding. So it reaches a point where it is a little difficult to accumulate jewelry for wedding. That's my personal view. And that should impact jewelers in the short term.
Yeah. Absolutely rightly said, Mr. Chokalingam there, because people are getting a little bit of worried, and especially in the down south, because they focus more on the gold ornaments. But having said that, Virat, I'd also like to take your view on Kalyan Jewelers for somebody who wants to invest or wants to take fresh positions. So what are those key levels that you would suggest them?
So as I can see, the stock is making higher low formation, which is showing upward trend. Momentum indicators are also supporting this move. I would like to recommend this stock where you can invest at this level. Your first target should be 650 and second should be 750, 650 and 715 with the strong stop loss of 550.
Strong stop loss of 550 there. With that, we are joined by our first caller on this show from Hyderabad. Hi, Mr. Subbarao. Good evening.
Good evening, madam.
Yes, how can I help you today on the show?
Madam, I am holding Tanla. I have purchased it at 667 rupees.
Okay.
150 shares.
Yeah.
It's a short-term move.
Okay. So 150 shares, am I correct?
Yes, madam.
Okay, 150 shares, Tanla platforms at 657 rupees, and looking for a short-term view on it.
667, madam.
Yeah, 657.
667.
Yes.
667.
667.
Yes, madam.
Okay, 667. All right. So it has dropped down to 652 currently, Virat, and was also, down in trade today over 0.5%. So what's your sense? What are the charts suggesting?
So the stock is trading in a sideways range with no clear direction, where it is facing hurdle somewhere near 660 and support can be seen near 630 mark. So the range is quite narrow. It is between the support and the resistance mark, which is indicating a neutral view. In such cases, the best strategy is to hold or wait for the confirmation.
Okay. Thank you so much for that. Now we are joined by Ravi on the phone line from Jewara. Hi, Ravi. Good evening.
Yeah, good evening, ma'am.
Yeah,
my
please
query
go ahead
is
with the
regarding
query.
Texmaco.
Yeah.
I'm holding Texmaco Rail. My query is, for a long-term perspective, is it good to hold on this counter or to shift to Titagar?
Okay. So you have bought 180. You have bought 500 shares at 180 a piece. Am I correct?
Yes.
Okay. Understood. So, Mr. Chokalingam, the stock has fallen to 161 levels, but Texmaco Rail, is it an optimistic and a positive, counter to look at from a long-term perspective?
Yeah, though it has fallen a lot, it's slightly stretched, but still one can hold, for 1 to 3 years because FY26 budget has not increased the outlay for railways significantly. But that cannot continue. In FY27 budget, I am confident that the government will accelerate the capex for railways. So therefore, Texmaco should be the beneficiary, and also stock has fallen a lot. So only those investors who are willing to hold for 1 to 2 years or 3 years can continue to hold, or even can buy on any decline.
Okay, for somebody who wants to stay invested in it for a minimum of 2 to 3 years, can look out for Texmaco Rail is what Mr. Chokalingam is suggesting. Now we have Mr. Murli on the phone line joining us from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, and thank you for taking my query.
It's our pleasure. Please go
my
ahead.
query is, I bought Gravita India
Yeah.
at a price of 200 shares at a rate of 1746.25.
Okay.
The point is, I saw its financials and bought it. I am willing to hold, but the thing is, two things which comes to my mind. I heard one of the major clients, Amar Raja Battery,
Yeah.
is also getting into recycling
Yeah.
of waste, which is one of the major customers for this thing. That is on the stage. And number two, is it Hindustan Zinc,
Okay.
which is where the today there is a news that there are further allocation of mines by government for Hindustan Zinc, and silver price is skyrocketing, and that P is around 17 or 18.
Yeah.
It's a good dividend yield.
Yeah.
Whereas Gravita is a very high PE as of today in the metal counter.
Yeah.
So which one is a better thing from a long-term point of view?
All right. All
And
right.
in this one, the dividend yield is better, and the PE is low, and the silver price is also zooming. And further allocation
Okay.
today. Which one is a better from a long-term point of view? I am looking at least 18 to 24 months.
Understood, Mr. Murli. And Mr. Chokalingam, Gravita India is the counter. But, having said that, do you suggest our caller to stay invested in this particular company, or switch their positions to probably an Amara Raja or a Hinzing for that matter?
Among the three stocks he has mentioned, in fact, I have studied all of them. The best one is Amara Raja for long term. Yes, right now it's having a difficulty in the new expansion. That is not going on as per the expectation, but it's a great company, great balance sheet. And, the lithium battery diversification definitely should ultimately click in. So that is the best stock. And that can be followed by Hindustan Zinc in order of priority. As he rightly mentioned, silver is the king. And also the government has taken the company, so that can mitigate all possible governance issue coming from Vedanta. Gravita, as an analyst, I would not recommend at all. It is trading at around 41 PE on FY25 earning. If you see worldwide, even within India, the metal stocks normally trade, at around 9 to 11 PE. And at best, even stock like Hindalco and all, trade at 13, 14 PE. But this stock is commanding 41 PE. So I would not pay that kind of PE for just a recycler of metals. So I would, fundamentally speaking, give a sell call on Gravita.
So a sell for Gravita and a buy for Amara Raja is what Mr. Chokalingam is suggesting. Now we have Manoj on the phone line from Hyderabad. Hi Manoj, good evening.
Yeah, good evening, ma'am.
Please go ahead. Yeah.
I'm holding Himatsingka Seide share at 155 rupees. That is 5,000 quantity.
Okay.
And I would like to hold it for next 1 year.
Yeah.
Just I want suggestion on the whether I can hold or sell.
All right. And your buying price is 155 or 165?
155.
165.
155.
All right. 155.
Correct, 155.
Okay. So you've bought 5,000 shares of Himatsingka Seide at 155 rupees. Currently, it's hovering around the similar levels. It's trading at 152, but since the quantity is large, so you have made some losses there of around over 13,000 is what I can see. So, Mr. Chokalingam, Himatsingka, are you viewing this counter? And if yes, so is it an optimistic company to be invested in?
Stock has corrected a lot, and historically in the last 20 years, it has always rewarded in an upcycle. And, also the rupee is depreciating, which should be favorable for the kind of business Himatsingka Seide is engaged. So one can buy for medium to long term at current price.
Okay. Thank you so much, Mr. Chokalingam, for that. We have Rajesh on the phone line from Chennai. Hi, Rajesh. Good evening. Okay, so it's a WhatsApp query, my bad. Rajesh holds ABB shares. He's holding 200 shares at 6,120 a piece. Currently, he's made losses of around 97,000. He's looking for a short-term view on the counter. So Virat, since he has made such, losses there, so what would your advice to him be? Like, should he be booking his losses, or there's any sort of, positivity there that you can see on the charts?
So the stock was trading in upward trend, upward moving channel, and recently it's broken below the support line. So this is a warning sign, and volume has also picked up recently, which is showing the seller interest. So technically, I would like to say this is a signal to sell, or you can reduce your position, but avoid to hold as much as quantity. I mean, you are holding 5,000 quantities, so either you can reduce your quantity, otherwise sell all the stocks.
Okay. Thank you so much for that. Now we are joined by Mr. Kudeshwar Rao from Andhra Pradesh on the phone line. Hi, Mr. Rao. Good evening.
Good evening, madam.
Yes, please go ahead with the query.
I am having 100 shares of Sundram fasteners bought at the rate of 1030. Can I keep it for 1 year for good profit?
All right. So,
Please,
Mr. Chokalingam, without wasting much time, Sundram Fasteners is the company's name that we're looking at. It's hovering around the similar levels, but if we talk about today, so it was up in trade today, nearly 2%. So, how are you viewing this as compared to its peers?
No, certainly Sundram Fastener is the leader in the fastener business. Excellent management, excellent promoter, no doubt. Unfortunately, even after significant correction from 52-week high, still it is stretched in terms of valuation, and also automobile outlook, whether within India or outside India, also not that robust as it used to be 2-3 years back. Still, however, if somebody is willing to hold for 2 to 3 years, this is one of the best auto component stocks. But I'm afraid that one may not make much return in the short term, in 6 months to 12 months. But it's a really great stock to hold for anywhere 2 to 3 years time frame.
Okay, so that's a hold on Sundram Fasteners. With that, we are joined by Hari Krishna on the phone line from Andhra Pradesh. Hi, Hari Krishna. Good evening.
Good evening, everyone in the panel.
Yes, please go ahead with the query.
Thank you for helping us with our stock-related queries.
It's our pleasure.
I have a question to Chokalingam sir. So actually, I follow him on other platforms as well. On his advice, and also I did some research. I bought this company called Nesco very recently. I averaged it at a price of 953, and I hold around 90 stocks.
Okay.
And it gave very good returns in the last 1 month.
Yeah.
So I just want to ask Chokalingam sir if I can add more for a long term, 3 to 5 years.
Okay. So Mr. Chokalingam, Nesco is the counter. Currently, it's trading at 1282, and he is sitting on some profits there of 30,000 rupees. So, what would your suggestion to Mr. Hari Krishna be?
Yeah, since 2010, I have been recommending Nesco. It's originally at around 100 rupees, adjusted for split and that. Even now, I have a buy recommendation. Target price is 1500. That is for short to medium term with 6 months to 1 year. I may be wrong, I have personally invested after initiating a buy recommendation to my clients. My company also invested. This is the one stock I bank on heavily on the basis of the fundamentals. This 1500 target is a conservative target. I believe that, the kind of many multi-bagger ideas I gave in the past, this also should be able to, play out as a multi-bagger stock in the next 4 or 5 years, purely based on the fundamentals. I may be wrong. Since I have invested, investors should take their own decision. The point is that it's an extraordinarily cash-rich company, and it is tripling the capacity, and it is holding 70 acres of land in Goregaon, and which is creating a rental business model in various areas apart from exhibition and the corporate park, and it has gone outside Mumbai also in terms of roadway infra. So all this would augur well, and I believe in 5 years time EPS can be upward of 200 rupees, 200 to 240 rupees in 5 years time. And if I multiply by even 20p on that 200, the stock from here at least triple in 4 or 5 years, if not more than that. This is my conviction. I may be wrong, but I have a tremendous confidence in the stock.
Okay, so Mr. Chokalingam is strongly bullish on Nesco, and with that we are joined by Krishna on the phone line from Bengaluru. Hi Krishna, good evening.
Hi, good evening. See, my question is about Reliance. So I'm holding 412 shares, purchased at the rate of 1270.
Okay.
So around 84,000 is my profit. But if I see last few days, it is continuously coming down because of the Geo IPO news. Okay. Either something is left here. How about the technicals? Another 2 years I can hold. Whether it will further it will go up from here, I would like to know from Chokalingam, sir.
All right. I'll get your query solved. So firstly, coming to you, Virat, Reliance is about to come up with its Q1 results tomorrow. So everybody is eyeing that. So there will be a lot of momentum on the charts tomorrow. But having said that, how are you viewing the counter?
So as I can see on the daily chart, the stock has had a strong rally recently, and now it is consolidating, or we can see a sort of profit booking right now. This is a healthy behavior, so no need to rush into buying or selling. Hold through this phase. It's a smart move. So you either you can hold it or you can add more stocks at this level.
Okay. So add more at these levels. And Mr. Chokalingam, I'd also like to take your view on the counter, since it's a strong company, but still for somebody who hasn't invested in it yet. So what would your suggestion to them be?
Yeah, in fact, we have a buy recommendation, and on the same channel, I also mentioned that it is emerging as an economy. And third, in the short term, it may not give big reward. Recently, it has recovered. Short term, it may continue to face some difficulty in year-on-year profit growth. But medium to long term, the potentials are huge. Definitely, the unlocking possibilities there from the mobile telecom, and also they already built 11,500 crore worth consumer goods business, and that also offers a lot of growth potential and unlocking potential. So I think Reliance Industries is one of the best large cap stocks for medium to long term investment.
All right. So with that, we are joined by Siddharth on the phone line from Tirupati. Hi Siddharth, good evening.
Hi ma'am, good evening ma'am.
Yeah.
Ma'am, can I invest in Vedanta at current levels for the next 10 to 15 years?
Okay. All right.
Or investing that same amount in any mid cap fund, which will be more profitable?
Understood. So, Mr. Chokalingam, Mr. Siddharth has a corpus of 5 lakh rupees there, and he wants to invest in Vedanta. But currently, the company is surrounded with some negative news. But having said that, fundamentally, how are you viewing the counter? Is it advisable for investors to, invest in it for long-term purpose?
It is a very interesting question. In the interest of the investors, if you permit me, I will take 1 or 2 more minutes extra. I heard him saying that he wants to invest for 15 years. That is a really very good mindset. That is the kind of mindset one should have. But certainly, in stock market, you should not buy and forget for 15 years. The prospects of the companies keep changing dramatically, even sometimes within a quarter or so. And more so in case of metal stocks. If you look at the last 20 year or 40 year or 60 year, the metal stocks always extremely cyclical, once in 3-5 years. And there are metal stocks which have fallen 50% also in 3-5 years, and then recovered even 100-200%. So therefore, metal stock is not the stock to be invested, continuously for 15 years. One has to take a view on a very quarterly basis. Having said that, if the investor has that kind of perspective to invest for 15 years, I would not prefer, metal stock like Vedanta. More so, there have been a lot of news around. Rather, I would, consider a stock like a State Bank of India. This is going to emerge, one of the topmost banks in the world in the next 15 years. I'm pretty confident. And this 25,000 crore mobilization also is a big positive, So therefore, one can buy that kind of stock for next to 10 to 15 years.
Okay, thank you so much for that, smoothly and very well nicely described suggestion there. But we have less time and we have 2 callers back to back. So I'm going to take one by one. Mahesh is joining us from Chennai. Hi Mahesh, good evening.
Good evening, madam. I wanted to ask about the new age tech stocks like BAC and CDSL.
Okay.
Is this a current level to enter? And what is the fundamentals and technicals, madam?
Understood, Mahesh. Now, let me just quickly go across to Prasad also, joining us from Bengaluru. Hi, Prasad. Good evening.
Hello, good evening, thanks for this.
Yes.
I am looking into cable stocks, in fact.
Okay.
And I have narrowed it down to Finolex cables.
Okay.
Will that be a safe bet, or do the experts have any other picks?
Understood.
At current price. Yeah.
Okay, understood. So we have two queries, Mr. Chokalingam and Virat. BAC and CDSL first. What would your pick be, Virat, quickly, if you had to choose one?
So it's a CDSL because as we can see, after a strong rally, it is also giving a sort of consolidation and a sign of a healthy. It's a sign of healthy behavior, and we are seeing that it is continuously taking support somewhere near 50 days exponential moving average, and it's still holding that level. So you might see further upside till 2000 if it is sustaining above 1800. So you can wait for a confirmation. Once it is reaching 1800 level, then you might see upside till 2000, 2200, where support can be seen near 1750. So it's a good stock to buy once it is breaching 1800 now.
On CDSL and Mr. Chokalingam, talking about the cable space, how are you viewing this space? And Finolex cable is the counter.
In fact, I have a buy recommendation. I believe that it is one of the very good opportunity to buy after nearly 45-50% correction. Recent oil price correction also is a positive because some of the inputs are derived from crude oil. And I also believe, I am not forecasting that the Finolex cable will be taken over. I firmly believe that there is a possibility of consolidation happening in the industry as two large industrial houses are entering. So from that perspective, I believe a company like Finolex Cable might see re-rating of valuation, and therefore I would give a strong buy recommendation on Finolex Cable.
Okay, so a strong buy recommendation on Finolex Cable. With that, I'm afraid that we are running short of time on the show. But thank you so much, Mr. Chokalingam and Virat, for being there on the show with us and solving all our viewers' queries so patiently. Thank you so much.
Thank you.
And viewers, with that, it's a wrap on this edition of Ask Profit. But please stay tuned and don't go anywhere as Sanjana Chauhan takes up with Profit 360 on the other side of the break.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Benchmarks snap a two-day gaining streak as Nifty IT emerges as the top losing sector for the day. Nifty Realty, Energy, FMCG and Auto continue their gains. Axis Bank's profit dropped by 4% in the first quarter to as more borrowers fail to repay loans. Bad loans also increased with gross NPAs rising to 1.57% of total loans. Despite these challenges, the bank's operating profit went up by 14% compared to last year. Meanwhile, Wipro's EBIT in the first quarter was lower than expected, even though the company secured new deals worth $5 billion. Wipro has forecast that its revenue for the next quarter could either fall by 1% or grow by up to 1%. The company also saw business decline in the European market. The GST department cracks down on 60,000 unregistered businesses and traders, sends notices to firms with over 40 lakh rupees in turnover, targets businesses such as ice cream parlors, salons and eateries. NDTV Profit launches a campaign, Spot the Scam, against fraudulent market advice by Dabba traders, advices that promise mega returns and attempt to lure unaware retail investors. Bharti Airtel partners with AI-powered search platform Perplexity to offer its premium Perplexity Pro subscription free of cost to all Airtel customers for 1 year. Good evening, you're watching Profit 360. Let's dive right into the news. The market ended lower today, breaking its two-day winning streak after a largely rain-bound trading session. Sectoral indices delivered a mixed performance, while broader market indices managed to outperform the benchmarks. For a comprehensive wrap-up of today's market action, let's go over to my colleague Harsh.
Well, it was expiry day, so that was just the kind of reaction we saw over the last hour and a half of trade. So we saw a bit of a slip where markets are concerned. There you go, you will see that on your screen. In terms of stocks, and if we could pull up the heat map, get better perspective, the breadth, of course, on the Nifty 50 was a tough one. But you saw some consumption stocks shine, some metals shine as well. You can see a Tata Steel right up on top. A Tata Consumer was the other one. Hindalco also, and Trent, Titan, all of those doing well. So those you can clearly see at the top of your screen. The laggards were, of course, the IT names. On the back of TechM's results, some of those IT names really haven't fired. And that is reflective with the way in which they've reacted today again. So IT was the other pain point. Let's look at the heat map of sectors as well, and let's close that out, and likely that's what we'll see. So realty within the broader markets pack did fairly well, sharp outperformance, but metals, pharma, FMCG were the three pockets which have done relatively better. So some bit of outperformance seen there. IT, of course, was the laggard. Along with that, PSU banks sank a little. and the Nifty Bank as well sank a little in trade. In terms of how the breadth was on the overall market, we opened positive on the breadth, but that weakened, and towards the end we were just about holding on to 1:1. So that's the take on the breadth. Where the broader markets go, the Nifty mid cap index largely flat. Not much of a reaction seen there, but the Nifty small cap index was actually in the green, so that's where some bit of outperformance continues to play through. That is visible, 0.25% higher on the Nifty small cap. Last off, I want to take some names and let's pull some of them up, some real buzzers in trade today. I want to start off with Ixigo. That was really the stock which was shining. Tech Mahindra on the broader market end of on the Nifty 50 end of things was the big loser. Thermax on the back of a brokerage call did really well. Some earnings, and within that earnings pack you had something like you had a few names within results like a JTL, a Newgen, and LTTS, all of which were buzzing. Some of the real estate names did well, including the likes of a DLF who we spoke with, and you also had some consumption names. Patanjali did well, a Relaxo, a Vedanta Fashion, Uno Minda within the auto pack, Craftsman Auto was also some which really shone in trade.
Thanks, Harsh, for that. Meanwhile, let's take a look at the day's big earnings. First up, Axis Bank reported a rise in provisions while its profit misses estimates. The bank's asset quality dipped, and it also reported a sharp rise in fresh slippages. Let's go across to Vishwanath Nair for more on the numbers.
All right, so Axis Bank reported its Q1 FY26 results late on Thursday, and what they're saying is that their net profit has actually dropped about 4% to a little over 5,800 odd crore. Now there are 5 key takeaways that we'll take you through what exactly happened in these results and why the net profit has fallen. The first of which is, of course, the asset quality position of the bank. That has worsened. The gross NPA ratio is up about 29 basis points on a quarter-on-quarter basis and stands at about 1.57%. The second important part is that the fresh slippages for the bank has risen sharply from about 4,600 odd crore in Q4 to 8,200 crore in Q1 of this financial year. The third thing that has happened is the technical impact that the bank is referring to. Essentially, what the bank has done is it has changed the parameters that are used to measure the gross NPA, the slippages, the upgrades, and other provisions and contingencies. Because of these additional sort of assessments that the bank has done during Q1, the gross slippages as well as the gross NPA numbers are looking a little inflated. And because of that, of course, provisions have gone up. The third important thing that has happened here is the net interest margin for the bank. That has dropped sharply for Axis Bank. It's come down actually from about 3.97% in Q4 to about 3.8% in Q1, and that's a sharp dip, and this is largely happening because of A, the Reserve Bank of India's rate cut, and B, because the fifth takeaway that we're reporting here is that there are single-digit advances and deposit growth for Axis Bank, and that is precisely why the net interest margin has dropped. Overall profitability has dipped because of this technical impact, and the bank's numbers are looking a little shaky for Q1.
And why is Axis Bank so confident about outpacing the sector in loan growth even after a slow Q1? And what's behind the sudden jump in bad loans? My colleague Vishwanath posed these key questions to the management. Let's listen into their response.
At Axis Bank, we're quite careful about what we say. I think sometimes we are blamed for not saying enough or not projecting things in the future too much. The fact that some of the retail asset book has not grown should actually give you confidence that we can grow, because there is that much more opportunity for it to grow. Some of the asset classes have not grown because you have seen a spate of regulation changes, which has meant that the way loans are done or the way loans are given out, their process has changed, or the way they have to be booked, that process has changed. So in some of the areas where the growth is not there, it's not because if you go and look at the numbers, the disbursement growth is quite solid, but the overall AUM has not grown because in many cases, we have seen loans getting repaid. Or renewal not getting done, etc., etc. So the second part of the confidence comes from there, that we know that the disbursement growth is going quite well, a number of asset classes in the retail area, but the AUM is not reflecting that as yet, and it will reflect over a period of time.
Meanwhile, IT bellwether Wipro reported a muted first quarter. The profit dropped by 7% but met the estimates. But the company remained cautious on the revenue guidance for the second quarter. Puneet Javeri joining us with an analysis of the earnings.
Wipro is in focus after the company reported their quarterly earnings. While the revenue was down roughly about 1.6%, we have seen the EBIT margin as well as net profit also fall by 6 to 9%. Now, in this particular quarter, it was expected to be weak, and the constant currency revenue growth has come in the middle of the management guidance of 3.5% to 1.5% fall in revenues. Going forward, they are expecting some kind of positive momentum, and hence the quarter 2 guidance of -1% to +1% in terms of revenue is something that they've given. In terms of deal wins, it was a decent quarter in terms of deal wins, over $2.5 billion to $2.7 billion in terms of large deal wins. Now, and they've had 16 large deal wins in this particular quarter. But the concern largely remains on how the conversion happens from deal wins into the financial numbers, and that'll be one of the key ones to watch out for in the quarters to come by. But post this results and the guidance that the management has given in quarter 2, it affirms that the second half of the financial year will be crucial for Wipro to show any growth for FY26, and that'll be something to watch out for.
Meanwhile, Wipro's guidance for the second quarter is flat, but the company expects the second half of FY26 to be more positive. Let's listen in to the CFO, Aparna Iyer.
In terms of deal wins and conversions, some of the deals that we won have, a good balance of both extending the work that we do, and there is an element of expansion. Given the nature of these deals, they will take about 6 to 8 quarters for them to just fully ramp up, right? But you will start seeing that trickling down. And we also had a very large deal win in Q4 of the last fiscal, right? The Phoenix deal win. So this does put us collectively in a better shape. And, Srini also characterized that in his speech by saying that the second half is looking far more positive. And we've got the deals that we need. Now it's down to execution. Your point on guidance for quarter 2, at midpoint, it's flat. We always guide based on the visibility that we have at the start of the quarter. We don't give a full year guidance, but just based on the deal bookings, we've already given you a color that, the performance would get better in the second half.
Moving on, Adani Enterprises will sell a 20% stake in AWL's agri-business to Wilmar International subsidiary Lens for 7,149 crore. This move is part of Adani Enterprises' plan to fully divest its 44% stake in AWL and eventually exit the FMCG joint venture. After this deal, Wilmar will become the majority shareholder in AWL with a 64% stake. Earlier in January, Adani Commodities sold a 13.51% stake through an offer for sale, raising over 4,800 crore. Now, about 60,000 businesses and traders are learned to have received GST notices from state GST departments in Gujarat, Tamil Nadu, Andhra Pradesh and a few other states, barring Karnataka, where traders and businesses have threatened protests and a complete shutdown over tax authorities accessing their UPI transaction data and now demanding tax payments. My colleague Shrimi joining in with more on this.
Yes, apart from Karnataka, actually a couple of states, GST department, especially in Andhra Pradesh, Tamil Nadu and Gujarat, have issued similar sort of notices to trader and businesses seeking tax demand for not getting registered under GST and evading taxes for some time. And in fact, the sources tells us that the investigation revealed that the UPI transaction of these businesses and traders has actually actually revealed that the turnover, the transaction they are receiving is above the threshold limit of GST, which is 40 lakhs for goods and 20 lakhs for services. Now, these businesses are predominantly is in the business to consumer segment, like ice cream parlor, eateries, event companies, as well as automakers, dealer, etc. So now the GST department, the State Department particularly, is trying to nab these businesses who are not under the GST registration despite crossing the GST limit, and try to sort of ensure that they are GST compliant. But at the same time, there are certain debates going on the UPI transaction, as investigation has tried to sort of track these UPI transaction of these businesses, and in some more state may also use these data to understand and to track the transaction and the turnover of these businesses to ensure the compliance part. So the debate is going on that whether the authorities have legal authority to access these data is one point, and in fact this has sparked a more bigger debate on the fact that whether it could demotivate the UPI transaction and push towards the cash economy. But so far the development is that more state GST department in different states have started sending notices seeking tax payment on pending dues, and in fact they have also reported that some businesses have also actually underreported the income, underreported the tax, and they are ensuring that all should come under the GST net.
Meanwhile, US President Donald Trump has indicated that the United States is very close to finalizing a trade deal with India, telling reporters that we have another one coming up, maybe with India. Now, this renewed optimism coincides with ongoing high-level trade talks in Washington, where Indian Commerce Ministry officials are in negotiations with their US counterparts.
We made deals with a lot of great places, but we had one yesterday, that was announced. We have another one coming up, maybe with India. I don't know. We're in negotiation. When I send out a letter, that's a deal. In other words, that's a deal. They don't want to ever say that. Oh, how many deals have you made? The best deal we can make is to send out a letter. And the letter says that you'll pay 30%, 35%, 25%, 20%. In one case, 50%. Brazil. And because what they're doing to their former president is disgraceful. I know the former president. He fought like hell for the people of Brazil, that I can tell you. And I believe he's an honest man. I think what they're doing to him is terrible. So, we have some pretty good deals to announce.
What we've been seeing over the past about roughly now 2 weeks, what we're seeing is the fact that there were the previous round of negotiations that happened, and now we are in the fifth and final round, hopefully ahead of this August 1st deadline. The negotiations are going on in Washington as we speak. Chief negotiator Rajesh Agarwal is in Washington leading these negotiations from the Indian side. You just heard from Trump. He said that any sort of letter that he's sending is a deal. Tariff rates of 30, 35%, 25, 20% even. We've now seen 19 in the case of Indonesia. So a 15 to 20% bracket of tariffs would be ideal relatively, but not tantamount to the sort of negotiations that we've had starting March of this year. What we're also picking up from official sources is the fact that India is very watchful of the tariff differential that it will have with competing manufacturing economies, especially you saw it with Indonesia, then Vietnam, Thailand, Bangladesh, Sri Lanka, all of these countries, India is monitoring the deals that they are making also very keenly. Again, agriculture, dairy, these have remained the red lines for India so far. And that is what we're continuing to see, that India has stuck to its narrative since day one about where it draws its red lines. So that is, again, a very important part of these negotiations. But all our eyes are peeled on at the end. This weekend, the talks were expected to last roughly a week. And so by Saturday, Sunday is perhaps when we can hear either from the American side or the Indian side for more clarity on this mini trade deal.
Right, an update coming in now on the monsoon session of Parliament 2025 that is set to begin on July 21st and will run until August 21st with 21 sittings planned. Several key bills across governance, taxation and institutional reforms are on the agenda. We're likely to see the Income Tax Bill 2025, originally introduced in February in the Lok Sabha, referred to a select committee which adopted its report on July 16th, and the report is likely to be presented in the Lok Sabha. Let's take you through some of the other major bills that are expected. We have the National Sports Governance Bill, Geo-Relics Preservation and Maintenance Bills, Mines and Minerals, National Anti-Doping Bill, and additional new bills that might come up in Parliament will be the Manipur Goods and Services Tax Bill and the Indian Institute of Management Bill, taxation laws. So these are the list of bills that are going to be coming up in the monsoon session. But of course, the most important one being the income tax bill that was originally introduced in February in the Lok Sabha. Moving on, days after the preliminary report into the AI-171 plane crash stirred widespread speculation, the Aviation Accident Investigation Bureau has appealed for restraint from the media and public alike. AAIB Director General GVG Yugandhar stressed that the investigation is still underway and it is too early to reach any conclusions, with the final report to be released only after the probe is complete. Urging everyone to avoid spreading premature or unverified information, the AAIB said such actions not only fuel unnecessary public anxiety about aviation safety, but also risk the compromising integrity of the investigation and the sensitivities of grieving families. Now, Bharti Airtel has announced a partnership with AI-powered search engine Perplexity, offering a complimentary one-year subscription to Perplexity Pro for its 360 million customers across mobile, broadband and DTH services. According to Airtel, this collaboration is aimed at making AI-driven search tools readily accessible to its vast user base. My colleague Aishwarya has more details on this exciting development.
First off, when this news came in, a lot of consumers or subscribers may have been perplexed, knowing that this 17,000 rupees per year kind of a plan of Perplexity Pro is available for free, absolutely, for only the Airtel subscribers, which you mentioned, rightly mentioned, about 36 crore of them across their mobile, broadband as well as DTH services. And this of course is significant because it also shows that there is a growing interest towards generative AI tools such as Perplexity and ChatGPT, so on and so forth. What this will help them use in terms of creating and generating content, images, videos, for some deep research as well. So it comes at a no cost for all subscribers of Bharti Airtel. Now, if you compare Perplexity Pro with other generative AI tools in the market on a yearly basis, this is priced at 17,000 if you're a non-Bharti Airtel user. But if you speak of the other apps available in the market, AI tools available in the market, which is a pro version of them, it's priced anywhere between 15,000 to almost 20,000 per year kind of a pricing. So an enticing offer, and if you're a Bharti Airtel subscriber, don't be perplexed.
Meanwhile, with this new partnership between tech giant and an AI model, my colleague Arushi is here to tell us how Perplexity AI compares to the other LLM AI models. Arushi, over to you.
A positive update coming in for Airtel users. India's telecom giant has teamed up with Perplexity, which is an advanced AI-powered answer engine. With this partnership, Airtel is giving its 360 million customers exclusive access to Perplexity Pro. But what exactly is Perplexity AI and how is it different from other chatbots like ChatGPT or Google Gemini? Well, Perplexity performs live web searches for queries by gathering up-to-date information and provides citations so users can verify the source themselves. That's quite different from most chatbots, which rely on pre-existing or outdated data and also don't display sources. While Perplexity supports follow-up questions, it's not designed for extended or free-flowing conversations like other chatbots. It depends on web source, which can be limited or behind the paywall. Another con is that it requires questions to be specific and may have regional access restrictions. However, for Airtel users, it's one more reason to explore what advanced AI can do, that too at zero cost for 1 year.
Now, the first arrest has been made in connection with the murder at Bihar's Paras Hospital, where 5 armed men entered the facility and shot dead Chandan Mishra, a patient who was out on parole for medical treatment. The police have identified the remaining suspects and are conducting raids at multiple locations to apprehend them. What you're seeing on your screens is CCTV footage from the hospital that captured the assailants drawing and loading their weapons before entering Mishra's room and fleeing after the attack. The authorities suspect the killing was carried out by a rival gang, given Mishra's extensive criminal background. More news coming in from Bihar. Bihar's Chief Minister Nitish Kumar has unveiled an initiative aimed at providing relief to the state's electricity consumers. He announced that all consumers in the state will receive free electricity for usage of up to 125 units from the 1st of August. This is projected to benefit 1.67 crore families across the state. The Chief Minister also revealed plans to install solar power panels on rooftops at nearby public places within 3 years. Bihar is aiming for an additional 10,000 megawatts of solar energy generation. Under the Kutir Jyoti scheme, the state government will fully cover the installation costs for extremely poor families. Now, the US Embassy in India has issued a strict warning to travelers after an Indian tourist was detained for allegedly shoplifting from a Target store in Illinois. The embassy made it clear that crimes like theft, even if unintentional or minor, can result in your US visa being revoked and may bar you from entering the country again. This comes after body cam footage of the incident went viral, drawing attention to America's zero-tolerance approach to crime for visitors. The advisory stresses, follow local laws, and one mistake could end your US travel plans for good. And with that, it's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm. And increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Spot the Scam is an effort by NDTV Profit to educate you, the viewer, and to protect you from the scams that are currently being perpetrated in the name of promising amazing returns through investment. Now, this is an NDTV Profit exclusive. We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies. The platform, called Trading Dost, is a classic racket, luring investors by promising huge returns. My colleague Charu Singh has this report.
On the morning of 13th July, we came across an interesting ad in a Hindi daily. It was quite an audacious ad because the trading firm that gave the ad promised 500 times returns to investors like you and me. That's not all. It had also promised opening an account with them with zero brokerage and no documentation. It seemed a little strange, so this entity called Trading Dost was irking us and we went to the SEBI website and checked for their registration. It was quite strange that none of the names mentioned on the ad or the entity's name itself was registered with the regulator. And hence, we decided to give this person a call.
जी कौन बात कर रहे हैं?
बोलिए ना मैम, राघव बोल रहा हूँ।
अच्छा राघव जी, मैं चारू सिंह बात कर रही हूँ एनडीटीवी प्रॉफिट से। आपका एक ऐड देखा था तो आप कॉल किया था। मुझे पता चला यहाँ पे कोई सेबी रजिस्टर्ड इंसान एडवाइस नहीं देता है। 16 साल से काम चल रहा है, तो ये कैसे पॉसिबल है?
नहीं, आप क्या बोलना चाह रहे हो, क्या पूछना चाह रहे हो? जर्नलिस्ट हो, न्यूज में डालने के लिए आप हमसे इन्फॉर्मेशन लेना चाह रहे हो या आपको हमारे साथ अकाउंट खोलना है वो पूछना चाह रहे हो?
अकाउंट तो नहीं खोलना है, इन्फॉर्मेशन ही चाहिए। इन्फॉर्मेशन तो न्यूज़पेपर में भी है। खैर, मैं तो बस ये पूछ रही थी कि ये 16 साल से बिना रजिस्टर्ड एंटिटी के कैसे काम चल रहा है?
मैडम, आप एक बात बताओ कि आप जर्नलिस्ट कितने साल से बने हुए हो?
मैं तो जर्नलिस्ट कितना हो गया होगा, 2 साल हो गए होंगे।
5 साल, 2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
ठीक है,
हमारा और आपका तो जन्म भी नहीं होता तब से डब्बा ट्रेडिंग का काम हो रहा है। अभी तो ये एनएससी, बीएससी, आप देख पहले क्या होता था, पेपर पे लिखा जाता था, आधा पत्ते पे चढ़ता था, आधा नहीं चढ़ता था। धंधा थोड़ी ना बंद हो गया, धंधा तो पहले से ही चल रहा है।
सही बात है।
एप्लीकेशन का काम ये जो चल रहा है ये 15-16 साल से चल रहा है। आप, मैं और आप तो डिसाइड नहीं कर सकते ना किसी के बोलने से। मेटा 5 एप्लीकेशन है, पूरे इंडिया में चल रही है मैडम, इंडिया के पूरे वर्ल्ड में चल रही है।
सही बात है राघव जी।
हाँ,
कहाँ से हैं आप?
कौन से मीडिया में डालना है ये तो बताइए।
NDTV
इन्फॉर्मेशन मांगे।
कहाँ से हैं आप?
हम तो हिंदुस्तान से ही है, बेस्ड ऑफ दिल्ली है।
दिल्ली से?
हाँ जी मैडम।
दिल्ली में कहाँ से?
दिल्ली में रहते हैं मैडम हम। वो देखा आपने शादरा?
राघव जी आपको डर बिल्कुल नहीं लग रहा कि ऐसे न्यूज चली जाएगी, लिख जाएगा, छप जाएगा, ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
अरे आप बोल रहे हो कि क्या कहते हैं बिना सेबी रजिस्टर्ड एंटिटी के एडवाइस दे रहे हो, जानकारी दे रहे हो।
एडवाइस किस बारे में दे रहा हूँ मैं? एडवाइस
रिटर्न की गारंटी दे रहे हो।
100% दे रहा हूँ मैडम। आप ट्राई करके देखिए कि आप पैसे डाल के डिपॉजिट करके ट्रेड करके विड्रॉल तो देखिए कितना फास्ट देते हैं आपको। आपका जो बिजनेस है वो आप करिए, मेरा जो बिजनेस है मैं वो करूंगा मैडम। ग्राउंड टूर पूछना चाहे तो बिल्कुल पूछिए, बेझिझक पूछिए। आपको मेरा पर्सनल नंबर चाहिए वो भी ले लीजिए मैडम, कोई प्रॉब्लम नहीं है।
बताइए आपका पर्सनल नंबर क्या?
585 पहले लगाना पड़ेगा आपको +971। मैं आपको इसी नंबर पे व्हाट्सएप कर दूंगा।
अच्छा चलिए कर दीजिए। ओके।
After this call, NDTV Profit broke the story first on its website. And on the same evening, India's leading bourse, the National Stock Exchange, came out with a cautionary circular for the investors. First off, they said that this platform trading Dost is not to be trusted and investors should not associate themselves with it. Secondly, they asked the investors, advised them to steer clear from these dabba trading activities, all these schemes that lure them and promise them high investment returns. After this, we decided to give this Raghav person another call to ask him how he felt about the NSE circular. First off, we would like to tell the viewers that first number on the newspaper ad did not go through and the second number did allow us to speak to him after 2 attempts.
हेलो
राघव जी आवाज आ रही है?
बोलिए मैडम।
सर आपने कहा था आपसे बात करनी हो तो आपको कॉल कर लूं, तो इसी
बात करनी है। मेरी तो बात हो गई आपसे कल।
नहीं मुझे आपसे बात करनी थी इसलिए मैंने किया था। अगर आपके पास 5-6 मिनट है तो मुझे कुछ चीजें पूछनी थी।
किस बारे में पूछना है मैडम?
सर आपने कहा था कि क्या कहते हैं ये गलत नहीं है डब्बा ट्रेडिंग या जो भी चैनल है, और ऐसे बहुत सारे लोग हैं, तो क्या आप बता सकते हैं ऐसे और कौन कौन से प्लेयर्स हैं जो कर रहे हैं?
कौन से न्यूज में देना आपको?
मुझे बस जानना है कि और भी लोग हैं और नंबर्स हैं।
नहीं हमारे पास इतना टाइम नहीं है मैडम कि आपके लिए हम कंटेंट दे आपको। हमारे बहुत काम करने के लिए मैडम, दोबारा फोन मत करिएगा प्लीज।
अच्छा तो आप ये बता सकते हैं कि आप यूएई का नंबर क्यों यूज करते हैं जबकि आपका काम दिल्ली से होता है?
मेरे पास है ही नहीं यूएई का नंबर। आपको कौन बोला मेरे पास यूएई का नंबर है?
आपने मुझे दिया था, शुरू किया था बोलना, लेकिन फिर आपने बताया नहीं पूरा नंबर।
नहीं है ही नहीं मेरे पास यूएई का नंबर। आपने फिर छाप दिया है, देख लिया आपने पेपर, ठीक है, कोई प्रॉब्लम नहीं है। आप करिए जो आपको लग रहा है करिए। आप हमें प्लीज दिक्कत मत करिए, हमें हमारा काम करने दीजिए, आप अपना काम करिए।
क्या आप यही काम कंटिन्यू करेंगे जो आप कर रहे हैं?
100% यही करूँगा मैडम।
ठीक है, और कब तक करते रहेंगे? कब से कर रहे हैं?
क्या करना है मैडम आपको?
सर जानना चाहती हूँ, ऐसे जर्नलिस्ट पूछ रही हूँ।
आज ही चालू किया मैडम मैंने काम।
क्या
आज चालू किया? आज से काम चालू किया। न्यू बिजनेस।
नया बिजनेस? कौन सा नया बिजनेस?
मेरा नया बिजनेस चालू किया मैंने, डब्बा ट्रेडिंग का। डब्बा देता हूँ घर में जाके, दाल चावल रोटी सब्जी।
और फिर उस ऐड का क्या हुआ जो आपने डाला था नवभारत में?
कौन सी? मैंने कहाँ डाली ऐड? गलत फहमी हुई आपको।
यही नंबर है न्यूज़पेपर के ऊपर, एनएसई का सर्कुलर भी आया कल शाम को इसी बात पे।
मेरे को नहीं आया मैडम कोई सर्कुलर, क्योंकि ये नंबर मेरे को बिलोंग ही नहीं करता।
तो फिर आपने ये नंबर उठाया कैसे?
मैडम आपके पास और कोई काम नहीं क्या?
नहीं सर, जर्नलिस्ट हूँ, यही काम है मेरा।
हाँ तो हमारा काम तो हमें करने दीजिए ना। हमारे को बहुत क्लाइंट फोन आ रहे, दोबारा प्लीज आपसे हाथ जोड़ के विनती, कॉल मत करिएगा। थैंक यू वेरी मच जर्नलिस्ट मैडम।
As you all just heard, Raghav had changed the meaning of dabba trading itself by the end of our call. This particular platform, trading Dost, is likely to disappear and reappear in some new avatar. And investors like you and me will be lured into such schemes every single day using Telegram channels, YouTube channels, WhatsApp calls and SMSs. And we must exercise extreme caution before putting our money in such schemes. Charu Singh in Mumbai for NDTV Profit.
I certainly was a little taken aback at the tone and tenor of the voice that this Mr. Raghav used when he was speaking to Charu. And there was absolutely no hesitance. Of course, at the end of that conversation, he changed his tone and he said that he was actually delivering dabbas and not dabba trading. Deven Choksi, Managing Director of DR Choksi Investment Managers, joining us now. Devin, thanks so much for taking the time. I hope that you heard at least a portion of that conversation. Are you surprised that people are unafraid to carry out what is essentially an illegal activity?
Yes, Alex, good morning. Well, I think not completely surprised though. I think because they are carrying out illegal activity, they know the perils and the consequences of those activities. Unfortunately, I think these illegal activities are happening in the system also because of the byproduct of our age-old trading norms and the rules. Today, I think in these times, when you have a complete blockchain in place to, I think, trace all your transactions, starting from order to the transaction, for banking, from stockbroking, for depository, for everything, you are still maintaining a kind of a system which was then installed at the time of introduction of derivatives. We started derivative market with 1 lakh rupees worth of market lot. Today it has become 20 lakh rupees worth of market lot. I don't understand the need for this particular market lot. Because of this market lot, which is a restriction that one has created, the fallout effect of this market lot is dabba trading. If you don't have market lot, then dabba trading do not exist. Now the question is that I think we are creating market lot for the safety of investors. 9 out of 10 investors are losing money. Where is the safety? So I think this is a subject I think which needs to be introspected a little bit more in detail. I don't necessarily blame, I think, the entities who emerge to take the inefficiency into their account and probably make money. We have seen Jan Street, I think, doing that. We are seeing local traders doing it. Inefficiencies, everybody wants to make money out of it. I think it's not their fault. It's a lacuna in the system which they are capitalizing as I see it.
Interesting. That's an interesting take. Devin, hi. Mahima also joining in. It's not just these scams, right? There are also scams going on where, people are just creating WhatsApp channels, Telegram channels, and going ahead and giving stock recommendation in terms of trading as well as, fundamentally buying the stock. If there's somebody who wants to begin trading today or investing today, what should that person keep in mind? There should be, I feel there should be an SOP that every investor should, be aware of, that these are the 3 or 4 things that I should keep in mind before joining any of these WhatsApp channels or Telegram group or before approaching anybody like Raghav.
So Mahima, I think my whole take is that I think every investor, I think, as they always say, the buyers beware. The investor also requires to be aware about, I think, certain rules, regulations, and the regime of the regulators. Unfortunately, I think he's a sophisticated investor who knows about everything. But the one who is not so sophisticated is only concerned with, I think, easy part of making money. He's getting into this particular trap and he's playing around. He does not even ask the question that who the person on the opposite side is. In fact, I think there are instances of impersonation in WhatsApp and Telegram accounts wherein people are cheated, their money, they're duped, I think their money has gone. All those things are happening under our nose. Maybe I think regulators are operating separately. The banking regulator operates separately. The security regulators operate separately. I guess I think it's time that finance ministry or government takes up this particular call, make all regulators work together and ensure that I think there is no such loose end in which I think people can take money out of somebody's account by way of impersonation on WhatsApp or on Telegram or any such kind of social media channels.
Devin, and ultimately, as you said, it's buyer beware, but from the perspective of managing expectations, I think what we've seen in the recent past is change of regulations in the derivative space where the regulator is attempting to at least hold back some of the fervor that people have and the fact that so many individual traders have lost money. So would you say more than anything else, it is setting of expectations? If somebody is promising you to double your money in 30 days or in that kind of time, it's something that any top investor in the world would be incredibly happy with, but nobody's achieved, right, Devin? So would you say that setting your expectations more than anything else is the most important thing?
Provided you are self-aware, I guess I think you are absolutely right in your question. But you as an investor, I think you don't have greed. I think that is impossible. Every individual person, I think, would have small or big greed. I think that is definite and that is a fact. So when you have greed, I think this kind of outcomes are bound to be there. It's not going to be very surprising if this outcome is not there. In fact, I think to teach them the right methods, You may do the public awareness program that you have been doing as an exchange, as a regulator. Everybody is doing this kind of program, but still it is happening and it is still unfolding. Remember well that I think we are still not 50, 60 crore investor accounts in the country. I think for a size of population, we still have only 10, 20, 12, 13 crore kind of an accounts in the country. I think if they have multiplied by 4 times, 5 times, this is even going to take a bigger shape. In my viewpoint, I think it is a regulator who has to basically install correct practices. Today, I think this particular market, and I'm taking the liberty of explaining this part a little bit, I think here, that today this market, which was evolved in 2000, derivative market, has now completed 25 years. In 25 years, what has changed? Probably nothing has changed, I think, except creating the larger and larger hurdles. That is not the solution. In my viewpoint, there are 3 different classes of players in the derivative market. One is a proprietary trader who is coming either from the local or the global side. I think what we have seen in recent days, one example. The institutional players who use derivative market for also the hedging purpose, and the retail who basically use the derivative market for leveraging as well as for hedging purpose. Now, if these 3 classes of players, they operate on one single platform with the same set of rules, the disaster is bound to happen. You are driving a bullock cart and you are driving a racer car on the same expressway. You are bound to meet with accident. In such situation, I think these 3 classes of players, I think, should be segregated, not from the price discovery point of view, but from the execution window point of view. The product differentiation has to be created for 3 segments. If you want to stop the menace of, I think, this double trading, or I think the higher amount of greed which is getting generated in the minds of people, I think this kind of system will have to be created. This system has the power to, I think, control the kind of, I think, nonsense which is happening in this particular place. If we can handle that part, I think that can possibly give a relatively better solution in my viewpoint. That is why I'm insisting that the remodification or the modification of this particular system is required at the uppermost priority level in my viewpoint.
And that's a very important point that you're making. Just another illustration of that is I can choose to have a 100-meter race with Usain Bolt, but I have absolutely no hope of winning that race. Devin, thanks so much for joining me this morning. Pleasure speaking with you as always. All right, so this was an attempt to draw your attention to some of the strategies that people are using to take your money away. In no other uncertain terms, effectively this is scam, and beware is the message that we have for you, and spot the scam with NDTV Profit.
We're joined now by Samir Arora, founder and fund manager at Helios Capital. We always look forward to these conversations with Samir. He speaks his mind and has the best commentary ever on what's happening in the markets. Plus, I love your glasses this morning, Samir. It's matching your jacket. Okay, let's start with the kind of appetite we've seen for State Bank of India. The reason I'm starting the conversation with that is because if you just look at fund flows, and we tend to look at fund flow data, foreign flow data, it's quite dismal. But when there is paper of value, clearly the appetite is very much there. Is that the problem? Not enough value being spotted right now in the Indian markets?
No. It is, of course, the fact that this is a big size issue and the stock is relatively cheap. By the way, we own it since June 20. And so that could be one reason. But I think the overall market flow dynamics have already changed. Because since April, May, when people have got, even though the US market is doing well, the world seems to have come to a conclusion that they have to diversify away from US a little bit.
You know,
long story. That is a short story. That you will get more of these. Of course, SBI itself was attractive because it looks visually cheap.
Yeah.
And it is cheap, and it is big, and it's easier for people to put 500 million. But if you give them $350 million deals, they will also get subscribed now. I think because the direction has changed.
The direction has changed. So, you know, I'm wondering whether you are waiting with bated breath to see the India-US trade deal or not. It's sometimes anticipation becomes so long it kills the buzz.
That's where it's gone. Now, basically, you know, you can see from the hints, according to me, it'll be between 15 and 20%.
Yeah.
So it won't be the 10 that we initially thought, but we will all view it as positive by looking at relatively what has happened to other countries, including China. So China is at 35 new, plus it had the old 20%. Let's ignore that. Okay, it's been there from previous Trump regime. So the new one for China is currently 10 plus 25 for fentanyl. So that is one competitor. Second, we can say for textiles is that Bangladesh more than us, Sri Lanka more, then Vietnam 20. So if you are in the 15-20% range, you can say we are not, we have got some advantage over some of the guys, but I don't think we're getting to 10 the way this conversation and the comments seem to be coming. But I'm saying beyond that, beyond a point, what will we get excited about except to say that relatively this advantage is there for some of our exports like textiles and here and there.
You know, just on a little bit of a separate note, Samir, I was going through your X feed, which I find most entertaining, and I have to ask you about this that you put up, where you say, analyst, we had a buy on the stock, we continue to recommend a buy. We actually made a graphic, let's pull that up. So client says, but how were the results? Analyst in the voice of Salman Khan, एक बार commitment कर दी तो मैं अपनी भी नहीं सुनता. I can't do the Salman Khan voice, but he says buy remains a buy. You know, this I think is an important point to talk about and address, Samir.
I aimed it at the IT sector, where companies have had pathetic results, broadly no guidance, and everybody say, no, we have a buy because next year there will be a 1% gain in something or a 0.5% gain in something. There is no logic. If you start from a zero base, then any of these guys would have put a buy. But because they had a buy, now they say, okay, let it continue kind of thing.
No, but you know, it's an important point to note. We did a piece recently about how a majority of buy ratings have not translated to anything over a year.
In terms of returns.
In terms of returns.
No, that is okay. But go beyond that. That if you have two bad results, you reduce your EPS guidance, you reduce your own EPS estimate by 5-6%, and then you say it doesn't matter, buy still continues. So in Alliance, when I was there as an analyst in the 90s, the rule was that if you cut guidance, if you cut your estimate by some X%, 4-5%, you have to change this thing. You can't say it doesn't matter. It's 5% less. How does it matter? Because we are long-term guys. That was the rule for being sort of not active, but to be whatever is the word. That you can't just generally let the buy be separate and the analysis be separate.
Okay.
So
coming back to IT. Coming back to IT, because that's an important one. No one can quite make up their mind. There is enough commentary which shows some positivity on IT and Indian IT, but the numbers are just not matching up.
No. I'm saying you look at those numbers and you make them positive. You take these guys' positive number and then say what is the valuation, what is the growth. Okay, instead of going 3 to 4, I will go 4.5. Now that is positive as per the market for 2 days. That because you have outperformed. But the point is that 4.5, how much will you give? Okay, make it 7%. Make it double of what the estimate is. What should be the P for that? Look at the Google P there. It might be 16. You do it SOTP, it might be 10. And here we are saying that doesn't matter, 25p is good because lever is 50.
No, so how are you looking at IT right now, Samir?
So we don't look at it much.
Yeah.
We don't look at it.
Completely underweight IT with all the numbers.
It depends on what you like. We have one stock, which is KPIT, which we also have kept. Although that also hasn't done much in the last year or so. Yeah, otherwise we don't have. Unless you call Indigene IT, okay, we have it. Depends on classification, but yeah, nothing else.
So ER&D is something that you're liking?
No, it's not like even that. That is a big concept. Look at the results of these other companies and how they have done. So you can call it one company now, whatever category you want to call it, because my general big picture thesis was, we don't like generally auto, we don't like a disruption by EV. But here he's assisting the disruption. Assisting the disruption is okay. Being disrupted is not okay. And basically, IT sector itself has been disrupted. What to say? IT sector itself is disrupted right now. People don't want to believe it's been disrupted black and white. You can see it in every result, every company.
What about the new age tech companies? Swiggy, Zomato, would you still look at them from a positive view?
Absolutely. But before that, they are not really tech companies. Tech company would mean that, they are basically, because what people don't understand is how difficult it is to, in real life, have 300,000 restaurants and 300,000 agents, and every minute they have to be busy, and every guy has to be delivered what was ordered, and there should be less complaint or zero complaint. Everybody should get it in 25 minutes and then go to the next guy and in Blinkit deliver everything in 10 minutes. It's a massive exercise. And so people think of it, oh, he's just delivering food to you, but that is not the way. It is an extremely complicated business. And we like Eternal more just because we have it in a bigger position. And by the way, we have just made 5x as of last week because we bought at 52. But the point there is, there are very few pockets in India where you don't have to rely so much on the end growth of the industry. You are relying on the change in buying habit. And at a very small percentage move, it has reached like maybe combined, this whole industry might be a $10 billion value, and whereas the market might be 500 billion or something for grocery and retail and all these things. So it's a very small shift, but you are still not depending on some unknown random this thing that the growth will be 8% and you will get new orders from somebody or something. It's a day-to-day business with the convenience being highlighted again and again because of too much difficulty in dealing with India every day in terms of traffic and pollution and weather and heat. And on the other hand, for whatever reason, very comparatively available labor. Now, if the world doesn't want it like that, there's nothing we can do, but that is a model perfect for India.
When you're seeing the results so far, and I know it's early days, it's barely a week, there's a lot of commentary on optimism with Q1. Q1 can have a positive surprise. Are you buying into that at all? Have you made up your mind?
I thought you said it well, that the results have been very weak.
For IT?
This week.
For the week this week, okay.
But I'm saying in general, I don't think that you can have... See, so we are bullish, but you have to understand what does bullishness mean in today's context. Bullishness is that India is better than most of the other countries or many of the other countries in terms of fundamentals and macroeconomics and policy sentiment or change, whatever you want to call it, on the margin. Plus, this flow-based thing is there. But since the results can't be very good, because in two and a half sectors, which are big sectors, the growth rate will be very low, which is IT, big consumer, and even although we own most of these big banks, they are not going to grow even 10%, I think. Maybe 8-10% they will grow because of NIM compression, this, that, for 1 or 2 quarters. So the aggregate earning, plus you've seen IT is actually negative. Today you saw that broking fellow minus 65. There'll be many of these. So in aggregate, the numbers can't surprise positively, but we can say going forward, consumer will move up to 3% and IT might bottom out, and therefore your earnings growth may be 12-13% instead of 9-10%. And therefore we say with all these positives, you are supposed to make 10-12% for now in a year.
So 10-12%, Sameer, this year. And with that, you've been positive with regards to insurance as a space as well. Yeah. You have HDFC Life, ICICI Lombard, all of them that have reported numbers in the last 2 trading sessions. Do you think numbers warrant a buy at current levels?
So first thing is, you don't know what I like because those funds I don't manage. Okay. I manage offshore funds, but broadly we all like, and I know what you're talking about, the mutual fund side. By the way, there's a third one we own, which is the health insurance. So yeah, broadly we like the theme. And the fact is right now there is a shortage of reasonable to high growth ideas in our market. And therefore any place which offers that is exciting because you can't have the whole portfolio growing just because, like this IT or these consumer large companies, or the guidance was 4% and they came out with 4.2%, therefore it's a buy. Those things we don't like. So we should at least start with the feeling that the revenue earnings will grow in the range of 12-15% or more. And anything which offers that with somewhat big picture support and backdrop and somewhat reasonable valuations will be a candidate considered
Pharma,
seriously.
very quickly, Samir, my producer is telling me I have to thank you, but I'm just going to squeeze this one in. What about pharma? Because pharma with
No,
what
you can
Glenmark
thank me
has done.
afterward and before. Nothing wrong. Thank you should be done anyway. He doesn't have to tell you. You should thank on your own. He
I have
doesn't
to
have
take
to
a
tell you
break,
that.
that's why. So I'm going overtime. There's a whole different metric here. No,
Arey,
but
now you are a
what
big
about
company. You don't need all these ad breaks. Tell me.
What about pharma stocks?
Pharma we like. Pharma we might buy more also. And we like healthcare also. So yeah, that broadly. But the thing is, those weightages, because the way we have done it in the past, these won't define our life, but they will be helpful. That means we are not going to make 15% pharma, but you can have 5-6% pharma. So you can say matters or it doesn't matter. But yeah, we like pharma and we like healthcare and we like this and we like Apollo and we like here and there pharma also. Yes.
Superb, superb. Thank you, Samir. Always a pleasure, always fun to have these conversations with you. Have a great day.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है. जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है. ऊपर से ये अलग फाइट है. कोई पूरा लेफ्ट तो कोई पूरा राइट है. बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए. इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी. मैं शुभांकर मिश्रा. मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर.
Good evening, you're watching The Big Question. I'm Sanjana. Generative AI is no longer just a buzzword in the advertising world. It's now a boardroom reality. According to a brand new Naukri.com report, 60% of India's top employers are already experimenting with AI tools in their marketing functions. And over half of these employees surveyed believe AI will make their work more creative, not less. But here's the flip side. 41% of advertising and marketing professionals fear that AI could lead to a loss of originality and creative thinking. And nearly 1 in 4 are worried about job security. So this evening we ask, is AI in advertising a creative collaborator or a silent killer of human imagination? We bring you voices from both ends of the spectrum. Let me quickly introduce Manish Bhatt, founder, director at Scarecrow, MNC Saatchi, who has always championed for raw human insight over algorithmic trends and joining us in the studio today. Harshal Karya, founder of Shebang, where AI isn't just being tested, it's actively shaping brand campaigns. Pawan Goyal, CBO at Naukri, who brings us ground reality from hiring managers, marketing teams and job seekers across India. And Dr. Himatsingka Seide, psychiatrist and psychotherapist, here to explore how all this change is affecting minds behind the marketing. So from chatbots and concept art to real fears of being made redundant, tonight we're going to decode what AI in advertising and all of these creative fields really means for the future of creativity. So let's come to the creative crossroads. Manish, does AI dilute originality, or do you think it can spark new forms of storytelling?
So I think actually everything works in this planet with the long-term insights. Like there were this Alexas and all, or even 3D as a technology, QR code. There's a time and there are something kind of washed off and something which actually lasted long.
Sure.
So AI has to pass that test. AI is a wider terms than these two techno gizmos I spoken about. But I think AI as a novelty, yes, it'll thrive. But you know, everybody also wants, it's under the garb of like kind of ease and convenience. Everything can't long last. It actually has to work for humanity for a longer terms. And I think if the ease and garb is the main thing, then people would have not done bungee jumping or even kind of skydiving.
Sure.
So people like the difficulties, people like the adventure, people like not all the time the ease, and hence I think AI would be a good novelty to start with. It is overarching, it is wider, so it will definitely help the human being. It is already helping. Today morning I had a presentation and I had used AI as a music track, but I don't think I would in a long term want to miss out on these working with music composer going to studios.
Yeah.
So I think it will prevail, the experience will prevail, the novelty will give its time. I think time being there will be a problem, but later it will all be settled.
I think even critical thinking, and that's something that we'll come to. I read a report a few weeks ago about how just the dependency on AI is also potentially reducing the feeling of being fulfilled, which comes only when you finish a certain task.
Yeah.
And if you're getting that kind of platform or that kind of dependency on it, that will potentially reduce. Harshal, in Shebang, how are you currently using Gen AI tools for creative output? And more importantly, are there any boundaries, any guardrails that you have?
Thanks, Sanjana. Nice to see you, and thanks for having me here. I'll just tell you a bit of context in terms of why we are so excited about AI. So historically, the marketing domain has only focused on the top of the funnel. So what do I mean by that is that we've only focused on the awareness phase of marketing. Pretty much all of marketing is focused on the awareness phase of marketing. What has happened, therefore, is that the consideration, all of the other phases of the funnel, the remarketing phase, the consideration phase, the bottom of the funnel phase, they often get ignored by marketers. What AI allows us is the opportunity to do optimum marketing at every stage of the funnel, because AI can create with speed and with scale and with a fair amount of sophistication. So you may have like all different kinds of consumers want to be spoken to differently. So you may have 10 Sanjana Chauhans, and one may like to have her email saying, "Hi Sanjana Chauhan." One may like to have her email say, "Hi Chow," for example. So AI can do a lot of A/B testing to figure out at scale multifarious messages of different styles across different stages of the funnel. That's why we're very excited about it. Also, at the top of the funnel, I think it gives creatives the ability to really experiment with outlandish things that production budget limitations often stop them with. So often and not, people have a lot of crazy ideas and they cannot be implemented simply because of production constraints. So that is what AI is really unlocking. In terms of guardrails, I think we're still really figuring out the guardrails, etc. But they're coming in place. But we're using Gen AI actually now for the last 1.5 years in our everyday processes. And I think it just the thing that I see creatives enjoy is that they can see further, or they can make sure that their ideas are able to be seen further.
Okay, that's a refreshing perspective. Let's take a reality check on what the data actually says. Pawan, your report, which actually this entire discussion hinges on, shows that over half of the workforce is optimistic, but also anxious. What would you say are the biggest fears that showed up?
So I think the fears that showed up is around loss of creativity and loss of job. But that also varies from different segments. Okay. The freshers are more optimistic with respect to job creation. The experienced folks, and especially the high-paying people who are paid higher, they are more apprehensive about the impact on jobs. Okay. But overall, if you contrast to US, in US, there is a lot more pessimism about AI. But if you look at the Indian market, 86% are positive about the impact of AI. They consider it as a threat. And this is similar to China, where I think the number is 75%. So perhaps it's the developing versus developed economy where we think that there's a lot more to be accomplished. So we are more optimistic about what AI will enable us to do than in a developed market where there's a lot more pessimism around the impact of AI.
All right, all right. So, Dr. Ruksheda, what are you seeing in terms of anxiety, burnout? Would you say there's an identity crisis among professionals because of the rise of AI? Is that something that you're noticing?
Thank you so much, Sanjana. And it's a very, very important question because, yes, what's happening today and what also is going to happen tomorrow. I work with a lot of emerging adults and young adults, and they are definitely seeing that a lot of work is getting outsourced in that sense, even though all the time they are the ones who are also consuming AI and using it to their benefit. Having said that, the fear that, okay, how long can I sustain? And for younger people, even as early as 5 years ago, we were kind of telling them that you also need to start picking professions or academic curriculums which will also be maybe AI friendly or which won't get replaced by AI. So that anxiety that we are going to be replaced by AI and how am I going to survive in this atmosphere is a very present and real issue that a lot of young people, a lot of academic institutes, a lot of training institutes are facing. And like I said, because we see that the technologies are getting advanced every single second that we speak. And even while we're embracing the technology, we are also noticing that, yes, a lot of it is also creating certain issues. We were super happy with a lot of communication technology, but that's also leading to less and less empathetic and human-to-human contact and interaction, giving rise to increased loneliness, even in a sea of people. So the similar kind of fear that this might also happen with creativity and other kind of jobs is definitely taking over and a cause of concern.
Okay, so what I want to ask, and this is exactly, I think, a perfect segue into my next question, and I want to address this to both Manish and Harshal. Manish, maybe you can address it first. What will tomorrow's advertising/creative team look like? Even if we're looking at advertising, looking at design, will we have AI copywriters as equals?
I think the replacement will take some time. The redefinition is already happening. Like, for example, I am wondering whether the person with a great craft is better, or the person who get the craft done through AI is better. So even a 2-year two-year in business versus a 15-year in business, I would probably, now looking at their skill sets to use AI to generate a temporary solutions which the users want or the clients want. So that curation is increasing, but that actually was there even during the Shutterstock came in our picture, or the stock pictures and all.
Sure.
So from shooting something to curating and using something, so that is already there. Here is a more tailor-made solutions and more crafted solutions coming. So it's frightening at this moment. It is redefining. It may impact the increments and the promotions of certain people, but I don't think it will replace people at this stage.
Got you. So what would you say is the boundary at your agency? Where do you say that, okay, this is where it stops? This is where there's no more use of anything to do with AI?
No, it's an exploration stage. So we are trying AI for everything, but we definitely understand the importance of our 60 million years of instinct which human species has developed. I don't think we call our agency as the champion of emotions in next 10 years. So where emotions will be very expensive. There won't be that. There'll be a cold world, and the emotions and warmth will be needed. I think we would be looking for that in the time of a cold technological invasions.
Absolutely, and then we'll need more of Dr. Ruksheda in that point of time.
Yes.
I think a lot of us need her anyway. And it's so interesting that you say that, and I'm going to bring Harshal in for his perspective, because just last week we had a discussion around IT. And the similar discussion, because we were trying to assess whether then a degree mattered or then a skill set mattered. So Harshal, curious to understand from you, what would you say the future ad team looks like?
So I think if I see it, I think it's this current ad team, all of them augmented with a second brain or many second brains sitting with them. So I think I see this as a great inflection point and the opportunity for the advertising industry to really leapfrog its value to customers, because it's particularly the new rising digital side of the advertising industry has been very agile. And also, I think AI really just superpowers this whole generation of digital creatives to be able to really come almost at par with the consultancies, because what you can now do is that you can bring the sophistication and the chops of the right brain and the left brain together. And I think that's the biggest leveler for AI. I think therefore the teams that are most agile with it will work really well. With us at Shebang, what we are really pioneering is the concept of an AI second brain for every customer of ours. So right from every online call that we have with them, we're recording transcripts of that and we're feeding it into a second brain. Every minutes of meeting is fed into a second brain. Every data point that we have is fed into a second brain. Every performance marketing data point is fed in. Every ad performance and brand uplift score is fed in. So you can really have a scenario 6 months later saying, tell me what happened in November last year and what worked in Diwali and what was the consumer saying then. And you have a lot of consumer work going on, and then you can layer that and say, how does that differentiate from what the consumer is saying now? So you have the ability to have a super intelligence at your fingertips, which can really give you a very cohesive solution to customers and make you bring the magic of people that you understand, emotion that you understand, coupled with the business understanding, coupled with technology to create a near perfect solution for customers with agility, with scale, with depth. So I think it's one of the most exciting times the industry is going through, and it is really the opportunity for us to increase the pie of the business and bring more people into the industry.
Great insight. Pawan, your data says nearly 60% of organizations plan to integrate AI into hiring the next year. So I'm curious to understand whether you have any data or your understanding of what does that mean for creative hiring?
So we don't have data yet on what it means to creative hiring, but we also have a marketing team. But I can perhaps pitch in and saying, hey, well, what is the impact of AI on our marketing team? I think it's just a lot of potential for our marketing team. Things that they could not do earlier, they are just able to do. They are able to produce content at scale, which is relevant to the audience of one. So the holy grail of marketing is right person, right time, right message. And that was done at a very broad segments, and our now marketing team is able to do with all the AI tools at the segment of one. So this just the creativity possibilities are just expanding, while there might be set of jobs which may, where especially people who are not using AI, I think they will become redundant. But those who use AI, they will become better and will be able to deliver a lot more value to in the creative space.
Okay. Dr. Ruksheda, from a physiological perspective, in terms of just how the human brain works, what about critical thinking? What about what we were just talking about, that feeling of being fulfilled, that boost of dopamine that one gets when you've completed a task? Please correct me if I'm just speculating or adding conjecture here. But does AI then worsen that, erode that? Does it worsen imposter syndrome in creative fields? Because the job might be done efficiently, but not as efficiently or not as fulfillingly in a way that when you sit down to really create something from ground up, right?
So thank you so much for that question. But I'm going, a lot of what is resonating is that, yes, these are still early days. We don't, right now, most of us are still feeling high that, oh, I know how to use AI and, get a better result. So we're still in that stage, even in workspaces. But when we are, I heard somewhere that emotions, and that's where the creativity comes from. That's not really true. Creativity doesn't come only because of emotions. Creativity comes from boredom. Creativity, the neural tracks that need to form in my brain for me to be able to think, like you said, critical thinking, all of that needs time and space. Just before I was coming on here, I had a 17-year-old and I asked her the same question. What do you think AI is going to do? She's like, yeah, no, nobody's going to replace human beings, and that's fine. And I asked her, you just, told me that you sit there and either the music is on or you're scrolling on something or you're doing something. So human beings in it already are not really just sitting with themselves and sitting with their thoughts and ideas to develop that problem-solving attitude that you require for everything in life, including creativity. So currently, even though people are happy that, oh, I did such a great job using AI, but it's also really started to scare people quite a lot in terms of what this may lead to. From a psychiatry point of view, it's also kind of, I'm optimistic, cautiously optimistic about all technologies and AI, but it's also kind of makes me wonder, because if the AI is perfect and if an AI generated image is perfect, is that going to also then relate for me that I'm going to go away from my reality? The reality is not going to look pretty enough. I can't upload a picture of mine without putting a filter or without airbrushing something or the other. So if we're already doing that, there's a lot of self-rejection, there's a lot of rejection of humanity in general in terms of the prettiness of it. And also the distinct difference between if I'm watching something that's fiction, that's not reality, versus I know what's real. So those kind of lines, which when they get blurred, causes a lot of human distress and a human destruction in a sense, in a way. So again, the ability to kind of decipher all of that is going to be quite problematic. And when everything is very sanitized and everything's very pretty and everything is very perfect, it's also very, very boring. And that makes people check out emotionally and thought-wise and all of that. So when we are, when we are seeing with the use of, like, I don't remember single cell phone number, maybe excepting for a couple of, mine or my loved ones. If you're already losing that, and if, with human beings, human bodies, it's like that. If you don't use it, you lose it. So those are some of the concerns that I bring to the table today, even though I'm being, like I said, cautiously optimistic about AI.
I'm hopefully noting down and furiously noting down all of this, so that, because the use it, don't lose it, adage stays with me. So thanks so much for that. Manisha, I'm curious to understand, how are clients responding to this? Are they hesitant? Are they maybe opting for something faster, efficient? Are they excited? Are they saying, आपने नहीं किया है, AI ने किया है, तो इतने सारे पैसे चार्ज मत कीजिए?
So we are not telling them that it's done by AI. Okay. Today morning also I lied to a client that okay, this track has been recorded.
Okay.
So we are in that stage where we can take that liberty.
Clients, I hope you're not watching them.
But yes, I think eventually it will be an open thing for everyone. It's like a computer, everybody uses it. So it's like that. I think it's going to go that path, but I see it not like a trend. Trend is everybody saying, everybody spoke about how we use it.
Yeah.
But I think I always have seen things like a art style, like a partitions, wars, pandemics, and this AI boom is all going to pass. And I think how the art, see, the commercial art will become more fine art when the commerce stop supporting it. So if the commercial field is going to be dependent on the machines, and then the human will thrive to become a better fine artist.
Right.
I would say my advertising and creative team would rather be a much more creative, because they're now not that their other jobs is also being done, so they'll be more. I would look at it as an opportunity of another art movement, like how the expressionisms and postmodernisms and many isms have happened. I think this will be a AI-ism maybe for us.
Okay. Harshal, do you see AI then widening the gap between agencies that adapt and those that resist?
Yeah, definitely. I think it is actually, without doubt, the biggest opportunity that we have. I think it's rewiring every part of the process. Intelligence is more scalable. Work is more scalable. And the agencies, and also not just the agencies, but all workplaces that adapt faster to AI will move forward faster. So there's no doubt that this is the biggest inflection and opportunity that we have. This is way bigger than social media. This is way bigger than digital marketing.
Okay, so Pawan, you, according to your report, and this is something that we have actually covered, 41% of ad professionals fear loss of originality. So is there any data that you have supporting that in terms of how the employers are addressing that fear internally?
We don't have that that data, and it is still all very new.
Sure.
Okay, if you just put it in perspective, ChatGPT is less than 2.5 years old technology. So I think when I speak to the employers, they're all still figuring out how to transition to this AI first world. What we see right now, it is in enterprises. It is mostly at pilot stages, and it's not yet moved to mainstream. But as they go to mainstream, perhaps some of these anxieties that you mentioned, that's where the organizations will have to deal with them. But it's still at pilot stage in most organizations that I'm aware of.
All right. So final closing, and I'm just going to come to Dr. Ruksheda on that. The kind of advice, not asking for free advice on national TV, but the kind of advice that you would give to people that are anxious about job security, anxious about critical thinking or dependency, or then just feeling empty, feeling that void because maybe the work isn't as fulfilling because of this heavy dependency that we all have on AI now?
Fear is always about uncertainty. Fear is always about, anxiety is always about losing control. And all of that, the uncertainty, all of us are uncertain. We don't know how far AI is going to work and for what. So for us to say that, oh, that's not a real fear, it's just anxiety, it's in your head, wouldn't be really true. Having said that, we look at like Singapore government, they have offered free or discounted educational courses for people who are in their 40s or over, so that they can relearn or learn different skills, which, because a lot of jobs are going to get redundant, and that's a real possibility. So people who do feel that yes, their work is going to get replicated, we would also encourage them that, okay, if you do have a problem, go ahead and solve it, figure out what your resources are, and figure out how you can either have a lateral move, if not a linear move in terms of your career, and in terms of dealing with a real problem in employability and just living expenses and all of that. Yes, all of us are going to have some side hustle, it looks like, if you're not in a situation, in a job which doesn't require AI. So definitely looking at yourself, looking at your requirements, looking at your life, looking at your resources, and then seeing how you can adapt to the technologies is something that we've been encouraging everyone. I mean, we're teaching grandmothers how to use video calls and things like that.
Right.
for good. So we definitely want to stay with it a little longer, not get too scared, but at the same time not be very frivolous about or neglectful of your own future. And if you're worried about something, definitely figure out a way to help yourself to reduce that uncertainty, get more answers, get more trustworthy.
All right. Okay, so if you can't beat them, join them. And that's what we're trying to figure out this evening. Is AI the destroyer of creativity or a muse in disguise? From campaign design to career definitions, the advertising industry is undeniably at a turning point. This evening's discussion showed us that while AI can speed things up, creativity still needs curiosity, empathy, and imagination. Qualities machine can't replicate, just as yet. But for professionals, one thing is clear. Adapting is not optional. Whether you resist it or ride the wave, AI is here to stay. Thank you to all my panelists joining me this evening. We'll keep tracking this shift for you only on NDTV Profit. Thanks so much for watching.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. As we normally do on this show, we get you actionable insight on how to build an investment portfolio or how to manage your personal finances. And today I'd like to talk to you about a subcategory of equity mutual fund schemes, and that is something that falls between large cap funds and mid cap funds. It's called the large and mid cap funds. Now, I was looking at the latest data from the Association of Mutual Funds in India, and I find that there are now 32 schemes in the category with a total assets under management of a little over 3 lakh crore rupees, which is quite considerable at this stage if you think about it. And large cap continues to be a larger category, and so does mid cap. But seemingly there are a lot of people that are finding merit in looking at this category. The question is, does it fit for you? And how do you determine which of these 32 schemes to invest in? I'm joined today by Anant Ladda, who is the founder of Invest Aaj for Kal. Anant, thanks as always for taking the time. And why has this category drawn your attention of late?
Alex, firstly, thank you so much for having me on the show. Always fun discussing important topics with you. See, I find this category as a combination of category which is investing in large cap, but also giving you some flavor of mid cap so that you can probably increase your returns, especially in the good times. Large cap is a fund which invests in top 100 stocks. Mid cap is a fund which invests in stocks from 101 to 250 based on the market capitalization. Large and mid cap is a beautiful category which invests in top 250 stocks, combined both the large caps and the mid caps. So it is a category where you are taking risk, but also not going beyond 250 stocks. So you're even ensuring that you're only placed out in top stocks of India. So it is beautifully placed for someone who is a moderate risk investor who has a goal which is probably 3.5 to 7 years down the line. This is a perfect timeline for this fund, and doing SIP in this fund specifically during the bad times or volatile times, I feel can be a beautiful system to go about it.
Okay, so that gives me my initial answer, but now I want to talk about how to compare. Now, ordinarily, you would obviously compare with both large cap and mid cap funds because it has elements from both of those. So let's first draw the comparison with large cap funds, right? Anand, so the criticism of large cap funds, and I'm not talking about the last 12 months or 1.5 years where there are schemes that have actually managed to outperform the benchmark, but by and large, over the course of the last decade, a lot of fund managers have found it very difficult to beat the benchmark. So that is why a lot of investors have said it is not justified to pay the kind of expense ratio that they are asking for because they're not able to beat the benchmark. You might as well invest in an index fund. Why is it that you are suggesting investing in large and mid cap fund, and is it able to beat the benchmark?
See, firstly, I totally agree with your point that if you want to have exposure to large cap space, investing in a direct index fund makes more sense. There will be times where index fund might be outperforming. There will be times where fund manager will be outperforming. Time will change and it's absolutely okay. But if you look at 20 years data, we feel that investing in an index fund was a better choice. At times, I see a lot of people and a lot of investors saying either I can invest in index fund or I can invest in active mutual fund. I think we should use combination of both. Both are beautiful categories and we should use both the categories of the funds. So if you are wanting exposure to pure large cap, I feel investing in Nifty 50 equal weight and Nifty Next 50 makes more sense instead of investing in a pure large cap active fund. Versus if you want to invest in mid cap, then you are having exposure of complete mid cap space. That is kind of a bit risky because if your time horizon is 3.5 years and you are investing in complete mid cap space, and right now valuation wise also mid cap is on the higher side, and if there is some 15-20% jerk in the market in that space, probably your initial experience with mutual funds might not be that fruitful. If we combine both the categories, large and mid cap, probably you are investing 60%, 65% in the large cap space and balance in this mid cap space. It gives you flavor. It gives the fund manager more choices to invest in. Basic issue with the large cap was that the choice of stocks was very limited with the fund manager. They could only choose from top 100 stocks. And now beating an index which already has 50 out of the top 100 stock is a bit difficult task. But to beat something with 250 stocks is a easier task to do probably, and fund manager has better choice to overweight and underweight segment stocks and probably take a more concentrated calls. So that is why it is a perfect fit for a moderate risk investor, and this space is perfectly suited for someone who want to invest in an active space and want to start his journey with mutual funds.
Interesting. Now, I asked you about the comparison with large cap funds. Now, let me get to the comparison with mid cap funds. Now, incidentally, Anant, the data, if I look at 5 years and if I look at maybe certain time frames, there are only a few time frames where the bulk of the active managers in the mid-cap category have actually beaten the benchmark. Even here, there is an issue. Traditionally, even 7-8 years back, we used to say, oh, you know, if you want to get alpha, you go to the mid-cap space, you go to the small-cap space, and the fund manager will generate alpha. Now, it's becoming harder to do that in the mid-cap space as well. Do you think that that's only because of the recent kind of churn that you've seen in the mid-cap space, or do you think that there's actually a reason for you to consider going for a passive plus active kind of approach? And the second aspect of this, Anant, is that a lot of fund managers are utilizing that 65% threshold for mid-cap funds, where you have to invest a minimum of 65%, and they use that buffer to pack it with large cap funds, because as you pointed out, in certain pockets, valuations are not attractive. So in any case, it's becoming like a large and mid-cap fund.
Interesting point and a very relevant question right now. I still have a strong feeling that if we check out the rolling returns over the last 10 years or 15 years, mid-cap funds have still done really well. We cannot expect all the funds to outperform index. But if in a category, 60% of the funds are outperforming an index, I think we are in a good space. And obviously, when we go to small cap, this outperformance will be more because the universe from which fund manager can choose is really large. Now, post the new bifurcation, mid-cap universe is also concentrated towards 150 stocks. So probably at times choosing from 150 stocks and beating the benchmark might seem difficult. But I still feel if you check out the rolling returns wise, mid-cap space and mid-cap fund manager have done a decent job. There might be some patches of period where the index has done better, but overall I feel this is still a space where active fund manager will play a very important role. And when we combine both the large and mid-cap space together, then we compare it out with the Nifty top 250 stocks index, we will see that the number of outperformance is even larger. So as and when you will increase the basket from which fund manager can choose, increase his choices, increase his decision-making power, we will find a better outperformance and better performance from the fund manager also. So he also needs some space. He also needs some number of stocks to play with. So I feel still mid-cap space is attractive. Valuation wise, yes, it might seem that we are on the higher side if we look at last 10 years valuation and the P ratio and last 5 year returns. Whenever last 5 year returns are superb, I get scared out of that particular space and I say that probably this will not replicate for the coming 5 years and we need to be cautious. That is why over the mid-cap category, specifically for the defensive or moderate investor, I am preferring a comparatively less riskier category, which is the large and mid-cap.
Understood. Okay. So just for the benefit of our viewers, Anand, I'm going to talk about the rules that are followed in this large and mid-cap space, where the SEBI requires that 35% of the investment of the assets under management needs to be in large cap and 35% needs to be in mid cap, and the remaining 30% can be allocated based on what the fund manager is seeing value in. As you pointed out, generally 60% in these schemes tends to be large cap. I'm just wondering now, if you look at these 32 odd schemes, Anand, obviously there are going to be different strategies. Can you describe a few of those strategies and what is your approach to selecting the right scheme in this category?
See, I feel selecting a good scheme in any category, basics remains the same. Firstly, we need to look at the fund manager. We need to see, for example, there's a fund manager who is managing 5 schemes. How many of his schemes has done quartile ranking wise better in the last 12 quarters? If out of 5 schemes, his 3 or 4 schemes are outperforming, he's a good fund manager. Probably in one scheme, he's not performing. It's absolutely okay. But we need to look at the mindset of the fund manager. We need to look at the history of the fund manager. Is he able to accept his mistake and make changes accordingly? So first, and by far the most important pointer is the fund manager and his style of investing and his quartile ranking. Secondly, while choosing a fund, a very simple and a very important criteria to look at is a standard deviation. It simply means that how much we are deviating from the standard, how much we are deviating from the mean, how much we are deviating from the benchmark. If the deviation is way too much, it means that your scheme might be outperforming in good times and superbly underperforming in bad times. I don't want that kind of fund. I want a fund which is having low standard deviation. It is not having a very high standard deviation, because when underperformance comes, it might be difficult for investor to hold on for next 3 to 5 years. And even after holding for 3 to 5 years, he might find it very difficult to continue his investment. So standard deviation might be an important pointer. Third, and a very interesting criteria, I am talking about some simpler criteria which can be easier for all the viewers to understand, is beta. And beta is something which is a two-edged sword. Sometimes we say that high beta mutual funds are better. Other time we say that low beta mutual fund is better. How to classify them is a very interesting science. See, beta simply means that if your fund's beta is 1.5, market is going by 10%, your fund will go by 15% up. If market is going down by 10%, your fund will go down by 15%. So it tells you how volatile will be your fund or how much movement your fund will do as compared to the index. Right now, we are towards the all-time high range. Right now, I want funds which has low beta, because if market goes south and there is something, I want that if market is falling by 10%, my fund should fall by 8%. Versus supposedly there is a situation like COVID, or maybe there is a situation like correction which has recently happened in market, maybe 20% correction from the top. That time I will probably look out for funds which has high beta. So this is a very interesting call which you have to make. And final important thing which every viewer can see is quartile ranking. We don't want number one fund. Number one fund will change every quarter. It will change every year. We want a fund which has consistently been in the top quartile or maybe in the second quartile at its worst. So we want a consistent performer which has performed consistently. I don't want outlier performance. I don't want fund which is ranking number one. I just want fund which is Rahul Dravid in my portfolio.
Okay, you said it, Rahul Dravid in your portfolio. Just a last couple of questions on the category. You said that it's meant for a moderate risk-taking investor. What is the percentage of allocation that you normally suggest, Anant, for this kind of an investment? And I would assume that you're going to pick one large and mid-cap fund, right?
Absolutely right. We need not pick a lot of large and mid-cap funds. One in our portfolio will suffice the purpose, and which one we will pick and how much we will pick completely depends on our time horizon of the goal. We need to properly sit down with our family. We need to sit down with our distributor, or we need to sit down with our advisor and properly jot down our goals. If our goal is somewhere around in the range of next 5 years, 6 years, 7 years, probably large and mid-cap fund category is a perfect suit or a perfect match for that time horizon. And we can map investment or SIPs in the large and mid-cap category to that particular goal. So goal planning will be the first pointer, and based on your goals, your fund selection will be decided.
Got it. And see, this is not a recommendation, Anant, and if you're uncomfortable, I'll stop here. But any schemes that you're paying attention to in the category?
See, right now, out of all the funds which are there in the category, 1, 2, 3, 4, 5, 6, 7, 8. There are 8 funds which are consistently outperforming their risk-reward ratio. So all those 8 funds, we can look at it. I won't name a lot of funds. I'll just give you an example, or I would just name a fund or 2 funds just for you to study. This is not a recommendation. This is not an advice. I even myself have some exposure to this category, and I might be having some of the fund. We need to keep the disclosures in mind. But if we check out the quartile ranking, standard deviation, risk reward ratio, and Sortino ratio and information ratio, purely based on 5 of these filters, if you will also put out these filters, you will also come to the same conclusion that funds like DSP large and mid cap fund, ICICI large and mid cap fund, Kotak equity opportunity fund, SBI large and mid cap fund, these 4 funds have been consistently performing better in terms of risk to reward ratio. Fantastic. Is what data is.
And that's all I'm asking for. Thanks so much, Anant, for joining in and for this lovely conversation. Pleasure having you.
Thank you so much.
All right. So now you know about the large and mid-cap category. You're probably already somewhat aware of it, but if you weren't, then now you know. I'd also like to talk to you about term insurance. And I know that we've had this conversation in the past, but it bears repeating. And more often than we do, in fact, if anything. We're joined this evening by Aditya Shah, who is the founder of Hercules Advisors. Aditya, thanks so much for taking the time. First of all, term insurance, let's ask the most basic question, which is that a lot of people think that they need it, but sometimes they don't. So who needs term insurance?
Good evening, Alex. So there are 2 cases for you to have a term insurance. Point number 1 is somebody is dependent on you. If something happens to you, that person should have some amount of money so that they can sustain your life. So point number 1 is, if you are the sole earning member of the family and your wife, your children are dependent on you, then you surely need a term plan. Point number 1. Point number 2 is, if you have a large loan liability. Most people have a large loan liability in terms of a home loan. And if you have a large home loan, something happens to you, the people after you must have the ability to service that loan. So there are two conditions in which you need a term insurance or a life insurance for that matter. Point number one is if you are the sole earning member and somebody is dependent on you. And point number two, you have a large loan liability. If any of those two conditions are met, you need a term life insurance.
Why term though? Because this is just pure life insurance, Aditya. A lot of the times, a lot of the calls that you get is, hey, you know what, we've got this great investment product lined up for you and uske saath insurance bhi milta hai. So you're sold these traditional products, you're sold ULIPs, and most people don't have term. Why do you think that is?
So, Alex, the genesis of this lies in the 90s, where a lot of LIC and other private life insurers tried to push traditional products and products where investments and insurance were combined. Let me first tell our viewers very clearly, insurance is a product to cover your risk. Insurance is not a product to cover investments. Investments must be covered through mutual funds. So if you buy a pure play term plan and if you buy mutual fund, your returns over a period of next 10 to 15 years will be far greater if you invest in a traditional plan. Let me also explain what is a term insurance. A term insurance is if during the term of the policy, say today you are 30 and up till 60 or 65 you have the term of the policy. If something happens to you, the sum insured of the term plan, which can be 2 CR, 3 CR, 4 CR, is paid out to your nominee, which can be your husband, which can be your wife, which can be your parents. So what really happens is if nothing happens to you, you seize the money up to the insurance company and the insurance company keeps that premium. So net, the insurance company is only covering your risk. It is not covering any investment that you've got. So a term plan is far greater than any other plans where there are guaranteed returns. Guaranteed returns carry 5, 6, 7% return. Whereas if you invested the same amount in a mutual fund, you could potentially generate 10 to 11, 12% return. Mind you, in equity, no returns are guaranteed. But over a longer period of time, we have seen mutual fund returns far superior than what a life insurance company can offer. So net, you should always buy a term life insurance and invest the rest of the amount in a mutual fund and say no to a traditional life insurance policy, particularly ones where they say invest some amount of money now and you will get some certain amount of money after 10 years.
Yeah, you said it. And by the way, a life insurance, pure life insurance product or a term policy can be looked at in a very similar manner as you look at your motor insurance. Motor insurance is a compulsory thing that you need to buy. But you don't claim it if you don't have an accident, if your vehicle is not damaged. And thank God, right, that you don't have an accident. The same way in term insurance, you don't claim it if you don't lose your life. And you should be incredibly happy that you don't lose your life. It's a cost that you have to bear. So Aditya, the point is, this is a term, as it said, it covers a term, right? And you pointed out, somebody buying at the age of 30 can get a cover till they're 60. What is a normal term that is covered by insurance companies, and how does the premium work? Do you pay it for a certain number of years, or do you pay it through the life cycle of the term policy?
So Alex, term plan has advanced a lot over the last 5 to 10 years. Term plans are available up till 99 years of age, but people must not buy a term insurance up till 99 years of age. Until you retire, the day you retire, your term plan should really end. Ideally, we take it as 60, 65 or maximum 70. That's when your term plan should really end. You must not be paying your term plan premium from the pension or your retirement corpus. That will be drag on your retirement corpus person. That's the first point. Now the premium paying term plans have now advanced where companies offer yearly payment. Companies offer a 5-year payment, 10-year payment, and 15-year payment. So what prepayment really does is it gives the insurance company guarantee that this customer is going to stick with you. The insurance company in return lowers your premium to some extent by 20 to 40%, and it is a win-win for both. So prepayment options of 5 years, 10 years, 15 years are available. Customers should exercise this. Customers should do their risk reward and see their cash flow positions and then decide if they want 5, 10, 15-year term. But they should always buy a term plan with a validity up to 60, 65 or 70, not more than that really.
Okay. I got it. Now, when it comes to the payment of this term, what is the periodicity? Because as I understand, you can actually choose different options here, right, Aditya? And what is the recommended approach to paying off the term insurance premium?
So my recommended approach is if there are various options available, 5-year payment term, 10-year payment term, yearly payment term. So what happens is when you choose a 5-year payment term, it is generally seen that the insurer gives you about 30 to 40% discount over the yearly premium. As you go to a 10-year premium, that discount shrinks down to about 20%. So as early as you pay to the insurance company is ready to give you certain amount of discount. It may not be possible for many people to pay 5 or 10-year term, but depending on your cash flow, the recommendation always remains to choose as early prepayment as possible. So a 5-year or a 10-year term, depending on whatever your cash flow position really is and what you can afford to prepay, that would be the recommendation. If at all you don't have that amount of that certain income, then only you should go for an yearly payment of term.
Okay. Now, what about how to choose between one and the other? And is there a variance of the premium? Because obviously there are multiple options to choose from or service providers to choose from. How does your premium get decided?
So premium gets decided on a whole host of factors. Age being the single most deciding factor in a term plan. The younger you buy it, the cheaper that you get the term plan. Second point is there is a pre-existing medical condition. The insurer will undertake a medical test, and basis that the insurer will decide if your medical condition is okay. He will give you the policy without any increase in premium. If your medical condition is not okay, the insurer may increase your premium, or the insurer may also decide to not give you a term plan. So by as young as possible, try to look at those two conditions, which is dependent and loan. If you meet any one of those conditions, buy as soon as possible and try to prepay as soon as possible. 5-year, 10-year term, that is an ideal choice up to 60, 65 or 70 years of age. Whatever suits you, that is what you should be taking.
Okay. What are the things that you have to disclose in a term policy, and what are the reasons why a term policy payout can be rejected, Aditya? And do you see cases where a term payout is rejected?
Yes. So insurance claim rejections are a major problem across the industry. There are certain amount of disclosures that you always need to keep in mind. Point number one is you should disclose your income very honestly. Of course, the insurance company will ask for your income tax returns. That is really very important. Do you smoke or you smoke and drink? That is one of the most important factors in a term plan. If you give a wrong disclosure there and the insurance companies comes to know that you have lied, the insurance company can reject your claim. Mind you, if you smoke, the insurance company does increase your premium by about 30 to 50%. And all those smokers who want a term plan must disclose properly that they are smoking so that the insurance company takes on the risk. Then the next point is any pre-existing medical condition that is there, any operations, any hospitalization that are there, all of those must be disclosed to the insurer in a proper way. And medical tests must not be manipulated the night before, so that the tests are proper in order for the insurer to accept your case. So disclosures are really very important. Disclosures must not be falsified, and disclosures and agent must be involved, or if you have sufficient amount of knowledge, you can reach out to the company themselves and the company will guide you how to go about it. But disclosures are paramount and very, very important in a term insurance.
Okay. Absolutely, and very important points that you're raising, Aditya, not least of which in the case of vices where a lot of people choose to not disclose. And well, every time you go to a periodic medical examination and you speak to the doctor, there could be that one instance where you have told them that you do consume one piece of alcohol or you smoke, and that goes into your records. Aditya, correct me if I'm wrong, and the insurance company will look for all of this information when they have to pay out the claim, right?
Absolutely. There was a famous case where the insurance company dug out a photo from a social media platform and used it to reject a claim because the disclosures were incorrect. Disclosures can never be incorrect in a in a term insurance policy. You must always disclose, even if that jacks up your premium. Never mind. It is like penny wise and pound foolish. If you don't disclose now and the claim rejects later, the whole idea of a term plan is